Hello, I'm Nick Collier from the Brussels office of the City of London Corporation, and I'm joined today by Isobel Clarke from the BVCA, the British Venture Capital Association, and Julie Shacklady from UK Finance, UK Banking and Payments Association. And we've just held an event on public-private capital markets. And let's start, maybe Julie, with you. Just explain our terms. When we talk about public and private markets, what does that mean?
Okay, so maybe I'll start with public markets and then hand over to Isobel for private markets. And so when we talk about public markets, what we're talking about are markets where financial instruments, and by that I mean shares in companies and bonds, debt, much more than that, but at a high level, that's what it covers, trade on exchanges, publicly on exchanges like the Stock Exchange, the London Stock Exchange, and Euronext. Those shares and bonds can trade freely on public exchanges. They can be traded, bought and sold by anyone. In private markets, on the other hand, instruments are not traded on exchanges. Capital is raised typically from institutional investors, sovereign wealth funds, family offices, and is put to work through private equity, venture capital funds, infrastructure funds, private credit funds, and through those funds finds its way to businesses that need that capital to grow. And in time, over various funding rounds, venture capital, private equity in time, some private credit, in time, those businesses might be ready to do an IPO or to list in time on the public markets. So to join public markets. But it's more interesting than that. So we found when we did a report on public and private markets recently, that there is an increasing convergence between public and private markets. So private market operators are increasingly turning to public markets to raise long-term permanent capital. But we're also seeing new innovations in our markets, whether that be crossover funds like LTAFs, which invest in both public and private equity, but also crossover markets like Pisces, which is an intermittent trading venue and fresh, hot off the press, and has just started to operate in the sandbox. And on that market, it draws from characteristics both from the public market and from the private market.
So there's been a lot of talk in the UK about why deeper private markets as well as deeper public markets is good for economic growth. By the way, the same agenda here in Brussels. Why is it good for growth?
Well, private capital investors, it's all about growth. Private capital investors want to back growing businesses. They want to improve their productivity. They want to help them create jobs. They want to help them accelerate that tech development and tech deployment to market, expanding into to global markets in time. So take them on that journey of growth. And through backing them for several years with active management and involvement in those companies, they will make returns for the investors that I mentioned before, the institutional investors that provide that funding. And high growth sectors are particularly in need of capital at the moment. So businesses that will contribute to the green transition, those developing digital infrastructure, life sciences development, a lot of which the UK is a leader in, but also across the EU, we need those sectors to be backed and invested so that they become the success of the future.
And I think, it's just to sort of finish this thought off and thinking about the session that we've just held, it's worth thinking about the ecosystem as a whole. Public and private markets are often set up as competitors to each other, but actually it's one market, and what they're doing together with things like bank lending is providing more funding choice to companies to help them to scale and grow. It's only going to be a good thing, hasn't it?
So scale up is a term we hear a lot in Brussels. Right? How do you get more investment, as you said, Isobel, into innovative companies? The kind of digital economy needs venture capital, private equity, as well as more traditional finance, bond issuance, bank lending. Now that's the same. I hear that in Brussels under this rubric of the Savings and Investments Union, or formerly known as Capital Markets Union. So is it really just the same agenda on both sides of the channel?
So you raise a really interesting point, and I think if we take a step back and look at it a little bit more from a macro perspective, the challenges. It's not just about the scale-up gap. There are also challenges around making sure that we can get capital into infrastructure, whether that be the green transition, the digital transition, funding defence, but also making sure that our citizens, both in the UK and the EU, we're living for longer, making sure that we can have a healthy, happy and financially secure retirement. So the initiatives you mentioned, and Isobel, maybe I'll bring you in now, but the initiatives that you mentioned, for me, it's very much the themes and the challenges are the same. Our policy levers might be slightly different, but we're all aiming towards the same goal.
Yes, I think the similarity is sort of who we're all trying to help as well. So 9 out of 10 businesses that are backed by private capital firms in our membership are SMEs, and SMEs are key to the green transition, key to the productivity puzzle that we have in the EU and the UK, key to growth. So I think there are two things I would mention. One is unlocking more pensions investments, which I know is not just a focus for the UK at the moment, but also EU. So unlocking more pensions investment into funds alongside infrastructure, unlocking it into private capital funds that can back those businesses, and thinking about how we use our national institutions, such as in England and in the UK, the British Business Bank or the National Wealth Fund, to have that private-public, on another form of public, but private-public partnership to help direct capital and de-risk some of those investments as well.
Okay, very interesting. Well, Julie and Isobel, thank you very much, and do take a look at the report.